Hi traders, this is Brad Gilbert with the FX Market Insight for the 15th of June. Now, we've just come out of the North American session. It was a hell of a 24 hours. So let me just run through a few things here. Obviously, the ECB meeting, the major event, we saw Euro drop from 118.50 down here to sort of 115.60, I think it is. And we're just resting on a really long-term support line in Euro. We could see this thing drop like a couple hundred points over the coming week. But that's a hell of a move. Now, what was sort of going on? If you have a look at the trading activity yesterday, it started early. Australian economic data, a little bit weak, but the Chinese numbers weaker. Put a little bit of pressure on the Aussie dollar, but it didn't really follow through until we had the Euro started putting a bit of downward pressure on the, upward pressure on the dollar, US dollar. And that sort of got the Aussie moving lower, but the US retail sales figure was the final push for a few of these currencies. So coming back to the European session, let me just sort of piece this together so you can sort of see exactly what's going on. Now, the euro here, as you can see, spiked higher on the announcement from the ECB. They did point out, they did give the market a specific sort of date to the ending of the QE, and that was around, or the end of 2018. So we've got till the end of this year. So that was quite positive, and that was what the market was looking for. But what they followed up with came out of the sort of press conference was pretty much that rates are going to be on hold, though, till the end of, or to 2019, another year and a half or something like that. So that lack of confidence, lack of direction about interest rates really saw people clear out of Euro. And then, so that saw Euro drop down towards 117. And then once you get down here, you get the strong US retail sales figures, and that's your 1-2 double whammy, and that gives that thing a real good beating. All right, so now Euro on the back foot, you are, or traders are going to be looking to sell rallies from here, looking to cash in on the next continued move lower, because the interest rate differential between the US and Eurozone is only going to get wider. We did see from the Fed yesterday, the previous day, that they are looking to still have another further 2 rate hikes in 2018. I think they're pricing in 3 for 2019. So I can't see Euro going any way except for down at this point. So yeah, the Aussie weak Chinese numbers coupled in with strong US retail sales figures, you get a breaking through 75.20. That is now on the back foot as well. Kiwi is actually holding in there quite well. It has managed to just tweak through 69.80 support, but it's not exactly convincing. And that's just following the its other correlating buddies, the Aussie, Euro, and Sterling. Now, Sterling had a wild sort of session. We had huge, really strong retail sales figures, saw Sterling sort of spike higher, up above 134.40. And then that started to sort of wane and started to drift lower as the Euro was getting belted as well. It started to drift lower straight away. I think there was a general expectation that the rebound in the retail sales figures from the previous month, which were very poor, was probably anticipated. So I think the market sort of saw that opportunity. Once the Euro turned, they were jumping on, getting out of their Sterling positions as well. And then once again, as we saw the strong US retail sales figures come out, the Sterling gave up any chance of holding around 133, and it's now down at 132.5. It's a little bit odd. So dollar yen, everyone's been asking what's going on with dollar yen. Well, dollar yen's, it's one of those currencies. It's just neutral, right? It's a bit of a reflection of the dollar, but it's more of a safe haven trade, bit of a play on that. I've overlaid the US 10 years here. There's been a bit of a breakdown in the correlation between dollar yen and the US 10 years, but you can see the dollar is starting to make some headways to the top side, and that's basically on the back of the strong dollar. Okay, strong US retail sales. The strong fundamental outlook from the Fed as well also plays into that, and that goes straight into dollar CAD. Sort of medium term, long term, dollar CAD has been going up. Short term, it's been battling away sideways and dealing with a stronger oil. Today, it's broken away from the correlation with oil. It has spiked higher above 130.60. We're up to 131, taking out stops. and Canada has got a huge amount of problems with regards the NAFTA situation. There's also a situation with the European Free Trade Agreement. The Italians are sort of sparking up and saying that they're not going to sign anything with Canada because all of their, their goods, especially their food items, are not protected. So that's another issue for Canada to deal with. And once again, that's a dollar situation. We've got strong dollar, weak Canada prospects. You see dollar CAD higher, regardless of what oil's doing. So as you can see, the majors there's a fair bit going on, and there's little bits and pieces in each currency pair, independent data in each country, some geopolitical situations still evolving. Dollar yen, I think, is the sleeping giant. It should really start to motor, but what it's experiencing, and this is what happens with dollar yen, it can get caught up in the yen crosses, and the yen crosses have been bludgeoned. We sort of highlighted yesterday a potential opportunity, or really good opportunity, on the next best trades on the yen crosses. And if I just switch over to those, you can sort of see where that really good sort of formation in euro yen in particular was. Now, this is what we were highlighting yesterday on the next best trades. We do have, we had a couple of others as well. Aussie yen, which was, you can see how it just sort of started to trade sideways as it went down through the trend line after the weak Chinese numbers. Now, I ended up closing that position out. After the strong sterling retail sales figures, it spiked, sterling yen spiked higher. So I cancelled that order. If anything, it may have been okay. There was a little bit of loose price action under the cloud there. I know it is a lot lower now, but that's in hindsight. But still, the one trade that was going to give us some gravy was euro yen. It snapped down through 129, sort of 80 there through the cloud, and pinned its ears back and didn't look back. So that's where the big ticket was. The rest of the currencies, a little bit convoluted price action down through Kiwi yen, and CAD yen is also, oil sort of continuing to go up. So you'd expect CAD yen to go up, but it's caught up in all this in the yen crosses just getting bludgeoned. All right, so that's where we are. These are good market conditions, and particularly yesterday. I mean, the markets are a little bit chopped up at the moment, but what you have to understand is when conditions are good. So you take out the Fed, right? All the calamity around the Fed, and what the market is expecting for the US dollar and Fed rates. Excuse me. Actually, just on that, let me just come back to give you a run through on the dollar. The US dollar itself, I mean, after the Fed, we did see it sort of drift lower. Excuse me. And then it's just a little bit of uncertainty around forecasts, what the market expects. It's usually a day later, but you can clearly see what the market was waiting for was the ECB. We get a really dovish ECB. You throw on top of that some strong retail sales figures out of the US. The dollar index, this is one of the biggest moves in a long time on the dollar index. It's shot up 160 points. You can see here in the dailies as well, it's broken through resistance on the top side. To me, it's going higher, and it's going to keep going higher. The more the US numbers come in stronger, the more the dollar will charge higher. And with that weak Eurozone background, it's to me, there's only one way to go for Euro, and that's down. It may not be a lead balloon, but I expect it to drift lower consistently over the coming weeks, if not months. Now, what have we got at the moment? Well, we've got good trading conditions. I know the technical side of things is not as good as yesterday, but we still have clear direction, right? Clear, strong US dollar direction, clear, weak Euro direction, clear, weak Aussie and sterling direction. Some of the currency pairs aren't clear, but we do have generally good, clear conditions. And there's not much too much talk about geopolitical stuff just at the moment. But just understand, if you've missed the trading opportunities, there's no turning back the clock and going, oh, well, I'll jump in today, all right? Because one thing that you have to understand is the next major event is the CAD manufacturing sales. there's not a hell of a lot on the fundamental calendar today. To end the week, we've got the CAD manufacturing sales and the US industrial production. Two good numbers that can move the currencies around. But understand the major core moves here of the majors have been run and done, right? You can't like go and rewind the clock. That's why when you do analyze the markets, you come back and make sure you know your levels, whether they're on the majors, on the end crosses, or whatever they're on. And now all you're left to do now is actually just adjust your support and resistance levels, to where the current market is, and that's all you can do. So basically, as you can see, there's not much to do here with a lot of the on your technical side of things, because a lot of these currencies are broken. Like sterling, there's a few currency pairs where you're adjusting the resistance level, but you're not moving those support lines because they are fresh, and those lines will act as those support lines will act as resistance. And up here on dollar CAD, you are looking at a previous resistance line, which is going to act as support. So make sure you don't go fiddling with these lines just here, just at the moment. They are fresh breaks, and they will come into play for trading opportunities today. So what I'm expecting is pretty much more of the same, maybe a slight retracement in some of these pairs. Sterling, maybe a little bit in Aussie, Euro sterling, maybe come back a little bit in dollar CAD, but I'm not expecting a turnaround in these current short-term trends. Okay, so Aussie to continue down, Euro, sterling, you'd expect the Kiwi to catch up. I'm expecting dollar yen to move higher and dollar CAD higher as well. All right, so fair bit of action there, big week. The Fed, the ECB, now we've got these things out on the table. I think it really opens the opportunity up for some even much better trading activity next week. Just keep an eye on your news pages as you go through. I do expect some of these trade war stories to spark up next week. There's fresh news here on Trump as well. The US attorney is suing the whole family for dipping into their non-profit, which I'm sure Donald's doing. He loves that sort of stuff. But I think we'll hear more about Brexit as we go forward. As I said, Canada's got issues with the trade agreements with the US, also with the European Union now. Now, this whole trade war thing could really blow up between everyone if they all start to get a little bit cranky. Sterling, well, Sterling had a pretty good run on those retail sales figures, but you saw how strong the US dollar is, and Brexit is still weighing on that. One thing that will distract the market, you've got to expect this as well, it can generally be a good trading time because there's less geopolitical news, and that's the World Cup, which is kicked off in Russia. So something to look forward to there as we trade through the markets, watching a bit of football. Anyway, guys, that's it from me. Pretty solid session. If anything, if you are sort of wondering what you should be doing from here, one thing I would suggest is if you haven't already done so, I mean, most of the best trading opportunities are done for the week. I would start planning next week, and we have a good range of data coming out, which we'll cover on Monday, but plenty to look forward to. If anything, it's a little bit thin on data, which is good. Make sure the technical side of things is pumping along quite well, and that's pretty much where we are. Actually, just last of all, what I should have mentioned a little bit earlier, on the technical, the daily analysis snapshot, you'll notice that a lot of these currencies have already sort of covered on the charts. Euro, sterling, Aussie, technically they are all looking pretty good bearish. And this is the good part too. You've got dollar, the dollar index, dollar Swiss, dollar CAD, all with buy signals there. So on the technical side of things, they are looking very good. The European Central Bank has come in with a bearish fundamental outlook for euro, and we do have the strong, economic data, strong sentiment out of the Fed, and that's why euro's gone ballistic. It's because we've got the polar opposites. We've got a bearish outlook fundamentally in Europe, and we've got a very positive one in the USA. That's where you get that 200-point move. All right, guys, so keep an eye on that. We will be updating the next best trade list as we go forward. The main takeaway from yesterday was the euro yen. Nice 100-point move there. But, you know, that trade's come and gone. Now we're going to look for the next trade. Keep your feet on the ground and start to look for some good trades. I can't see it right at the moment because of where the charts are, where the currencies are on the charts, but you never know. It might pop up later in the day. All right, traders, thanks for joining us, and have a good trade day. More to come, you know, from the markets. Cheerio.